session for tonight. Okay, so okay, let's see. I just want to make sure that that we are recording this. Okay, so I am I'm very excited to share with us tonight about forex trading, simple forex trading ideas. Most of you, of course, know my name, Jeremiah Kendagor. I'm a forex trader. I've been in this industry for quite a while, both working for the bank, and right now I'm focusing on seeing how to make this possible for myself and for friends like you and all of us to be able to trade the forex market and make money. I've been looking at this. Mutahi, I don't know whether you are on device audio. Maybe somebody can send him a private message to Mutahi just to be on audio so that he can hear what we are saying. Yeah, so as I'm saying, I'm excited to be able to present to us forex trading, a few ideas that I'm sure you know, but I think they're important to just discuss and to find out whether actually forex trading can make an impact in your life and can make you money. All right, so tonight I'll share, and as I mentioned on the topics that we will share tonight, first of all, I'll share these ideas about forex trading, and then we will look briefly about the London strategy, London daybreak strategy. Then from there, we'll just wrap it up about basically what do we expect in 2020 and what is our strategy on going forward. So basically, that's what I want to bring to us tonight about forex trading, okay? And for me, is to make sure that everyone understands that forex trading is a very simple way of making money online, all right? Okay, thank you. Let's begin. So today I just want to talk about leverage, okay? And in forex trading, we normally say that forex trading is done on leverage, okay? Unlike, for example, if you are trading in Nairobi Stock Exchange, if you trade in Nairobi Stock Exchange, it will mean that for every stocks that you buy, either for Safaricom or for KenGen or for any other company that you buy, KCB, whatever it is, you will spend equal amount of money for equal amount of shares. But in forex trading, there is something called leverage, which many people need to understand how leverage can help you, and it also can be something that can hurt you. All right. So so that's what I want to share with us tonight. Briefly regarding that, let me just make sure that sound is correct here. Okay. All right. So what is leverage? Leverage basically means that when you open an account with a broker, the broker will give you or will lend you money to trade in the foreign exchange market, and the broker will take the deposit that you deposit with the broker as collateral. Okay, so leverage is basically money that the broker lends you to trade in the market. All right. So normally when you are trading in the market, you don't trade your own money. You actually trade the broker's money. So actually the broker lends you money for you to trade in the foreign exchange market, depending on the deposit that you give to the broker. And why we say that this is a highly leveraged trading is because for every $1 that you give the broker can give you as much as $100, $200, $300, $400, or even $500. In fact, there are others that give you more than this. But just like we normally say in leveraged trading, is that this can also be your, it can also be how you lose money very quickly, all right? So that's why when we trade in Forex, we normally say, don't over leverage. That is, don't use so much of the broker's money, because when you are on a negative trade, it will mean that you are losing, and for the broker to do what is called a margin call is quite easy, all right? So, so when you are trading in the foreign exchange market, you are using the broker's money. When you are in profit, everybody is happy. But when you are in losses, the broker will not allow you to lose to the extent of how much you have deposited with the broker. So that's the most critical thing that you need to understand about leverage. So maybe let's go to the next point that I think could make a little bit more sense for us here. And that is, what is a lot size and what are pips, okay? Now, normally, because the broker gives you money, there is standard amounts that you can trade in the market, all right? And they are normally standardized in what is called a lot size, all right? So a lot size is a standard equivalent to 100 units of the currency that you are dealing with. So for example, if you are talking about euro against dollar, then one standard lot size would mean 100,000 euros for that you will be trading when you trade one standard lot. Okay, so that would be a trade that you will place in the market for that. Now, so a standard lot is what has been standardized in foreign exchange leverage trading. That is in this context that we are talking about. All right. So one standard lot is equivalent to 100,000 units of the currency that you're talking about. Now, these units can be subdivided to enable people to trade smaller amounts. So you can have one mini lot size, which is a tenth of a standard lot. So that means one mini lot will enable you to trade 10,000 units of the particular currency that you are talking about. So if, for example, it is US dollar against Japanese yen, then you are talking about in a mini lot, you are talking about $10,000 that you will be trading against the Japanese yen. All right. So that can also be subdivided into a micro lot, and a micro lot will be again a tenth of a mini lot, which is a percent. Okay, a cent, 100 units less than 1,000. The standard lot. So a micro lot will enable you to trade 1,000 units of the currency that you're talking about. And we still have even a smaller one than that, which is one nano lot, okay? And that one will enable you to place 100 units of the currency that you're talking about. So, so basically, trading in the foreign exchange market, you trade in lot sizes, and they can be in standard lots, mini lots, micro lots, or nano lots, just as I've explained here. Now, how do these relate to changes in price? Now, prices change in also standards called pips, okay? Prices can change in pips or in points, okay? Points now are a tenth of a pip. All right. So a pip is normally what has been standardized as the smallest change in a currency pair. All right. Whether it is going up in price or coming down in price, they go up or down in what is known as pips. And pips can also be subdivided into points. All right, so I think that one I didn't mention it here, but I think it's good just to mention that. So how much can you make when the currency, when a currency moves? All right, so how much you make is determined by the lot size that you trade with. All right, because if you trade with one standard lot, for example, then you are talking about 100,000 units of the particular currency you are trading with into the market, or how many pips the price will have changed. Okay, so if the prices changes by 1 pip, there is how much you make. If it changes by 2 pips, and so on and so forth. Okay, and then again, it depends on the currency pair. For example, if you are talking about US dollar against Japanese yen, then the currency we are talking about here will be the US dollar. That is the first currency that is quoted in the quote. If it is euro against US dollar, then the particular currency we are talking about will be the euro, which is the first one that appears on the currency quote. So it's also important to know that it's not just the pip or the pips that determine how much you make, but how what is the commodity currency that we are talking about. The commodity currency is the first currency that is quoted in the quote pair. All right. So the way the currency pair is quoted determines which particular currency we are talking about in terms of the units that you are looking at. All right. So that's about pips. So I just want to mention here that one standard lot, okay, will give you 10 pips per, $10 per pip. And that is when we are talking about dollars as the commodity currency or as the base currency. All right. So if the US dollar is the first currency that we are talking about here, then every pip that particular move makes will make $10. All right. If you are trading a mini lot, it will be $1 per move, per pip. All right. And if you are trading one micro lot, then you are only making 0.1 of a dollar. That's a cent. All right. And if you are trading a nano lot size, then you are making 0.01 for every pip that the currency moves. Now let's move on and just talk about what actually happens every day in the market. Now I looked at babypips.com, and anybody you can actually go to babypips.com and you can get to know how much do currency pairs move every single day. All right, and you can see here the first currency here that is mentioned here is euro against USD, and this is approximately how much it moves. Okay, they are talking about Sunday here, basically because you are talking about the market normally opens at midnight of Sunday. All right. So for people who are in the US, according to them, it actually starts on Sunday. All right. Because for them, midnight of Sunday is still Sunday in the US. All right. So that's why they are saying here that the euro moves about 69 pips on Sunday, 109 pips on Monday, an average of 142 pips on Tuesday, 136 pips on Wednesday, and so on and so forth. So you find that the days that the currency moves quite a lot, quite a bit, is normally on Tuesday, Wednesday, and Thursday. All right. But if you look at it from the perspective of if you are in Kenya, probably then you will need to shift these movements one day ahead, and you'll be making it Monday, Tuesday, Thursday, and up to Thursday. All right. So I want to make it quick here that the pound pairs, anything that is associated with pound, normally has a lot of pips that moves every single day. All right. So it makes sense that one of the strategies that I look at is normally the pound pairs, because it will give you a lot of pips every single day, okay? Okay, all right, and if you are okay, probably you can type 111 to just understand whether we are together and you are following me on what I'm talking about today. Oh, thank you very much, Mutahi. Now let's talk briefly about risk management. Now, with regard to risk management, it's normally recommended that for every $100 deposit you give to the broker, you should not trade more than 0.01 lot size. That is, you should trade a micro lot size for every $100 that you have. So if you have $1,000, don't trade more than 0.1. If you have $10,000, don't trade more than one standard lot. Okay, so that is very critical to remember. And I think I will do another training, especially with regard to risk management. The fact that sometimes when you seem to be having good trades, you sometimes get tempted to put more lot sizes. But that can only be short-lived, because in trading, you can never be sure 100% of the time. So there are times when you will lose. And that is the day that you will be caught if you have been over-leveraging your account. It's better to grow slowly, but consistently, all right? It's better to grow slowly your account, but consistently, instead of having huge growth one time and losing your money another time. So that's about risk management. I will not dwell so much on it today, but let's talk about basically, if, for example, you target to be making 50 pips per day, what would that mean to you? Okay, so what can 50 pips per day mean to you? Okay, so if you target to make an average of 50 pips per day, so let's go back to a micro lot size. A micro lot size, we say that for every pip, you will be making 0.1 US dollars. So 50 pips would mean that you will be making $5 for every 50 pips. Now, if that's what your target is for the day, it will mean that for every $100 that you trade, you will be able to make 5 out of 100, which is 5% per day. Now, that is incredibly very good. That's why when I say the London daybreak strategy can even give as much as $100, okay? Can give you as much as $100. I'm sorry, 100 pips per day. That is incredibly very good. So anything that can give you more than 50 pips per day is extremely very good, because what does that mean? It means that for you to make, for $100, you can make $5 per day. That is $100 per month. Why $100 per month, or why 100% return on investment? Is because in one month you have 20 trading days. Okay, 5 days for every week. For 4 weeks, that is 20 days. So you can actually double your account every month if you actually are able to make 50 pips every single day. All right. If you are making 50 pips every single day, you can double your account in 1 month. All right. That is why I keep on saying this, that Forex trading is worth the effort to learn how to trade. Because if you can be able to have this kind of return every single day, I bet there is no business that can give you this kind of return on investment. That is why I say that Forex trading is a worthy investment to study and to learn. I can just give you simple examples. Normally, we don't encourage you to be posting your trades results. But look at this. These are just few examples that I have. This is $471, which was almost 10% of my account. This one was 228. That was almost 5% of my account. These are single day trading, all right? And maybe so that you don't get me wrong, I have a disclaimer here, all right, on foreign exchange, which is important that every time we talk about foreign exchange, we have to give a disclaimer that past results do not guarantee future results, and every result that you have depends on the effort that you put into your learning and into your trading. All right, so I just want to say that the London price trap strategy does almost more than 100 pips per day if you do it correctly. In fact, you can actually do much more than $100 on every single day if you do it with the discipline that is required and if you learn exactly how to trade the foreign exchange market. In fact, I've used here London price trap, okay, trap strategy. And probably if you check on our Telegram, I posted one of the top trainers of IAM called Christopher Derrick, I think that's the name, who actually teaches this strategy of price trapping. It basically means you look at where the currency is trading, and you look at the highs and the lows, and you put your buy stops and your sell stops on those particular levels. And basically what we are trading on the London strategy is actually a price trap, okay? You are trapping the price within a particular range, and you are saying that when the market expands beyond that range, it will trend for at least the amount of pips that you are looking to make. All right, so basically that's what the London strategy is. So I just want to, basically that's my training today. I just wanted to bring us to speed on those particular ideas. I will go briefly and talk about the London strategy, and then we talk about that. But before I do that, I just want to say that Forex trading is very simple, yet it is not easy, okay? But it is worth your effort to learn. It is worth your effort to learn. And so, in fact, what I recommend for 2020, what it will take you to succeed in Forex trading in 2020, which is coming just in just 1 week. This is what I think we probably might need to look at. One is to increase your knowledge. Get the knowledge you require to actually learn about how to trade. And my highest recommendation is IAM Mastery Academy. Okay, if you are not a member of IAM Mastery Academy, please side chat any one of us and get plugged in immediately. If you are a member and you have not renewed your subscription, I think it's time that you did that. As you see, it is possible to have better return than any business that you can get involved in. The beauty about this type of business is that you are in full control yourself, all right? So, and the beauty about IAM Mastery Academy is that you have top traders in the world that you can copy their trading strategy. For example, how I have come up with this London day strategy, I have looked at the strategy that one of the trainers called Basco Ichman actually uses, all right? And it is quite an amazing strategy that he uses, all right? He does the London strategy, and then he uses one of the tools of IAM, which is called the pivot scanner. And just this last Friday, was it Friday? Yes, Friday. I actually decided to post trades using the pivot scanner. All the 4 trades that I posted hit take profit except one which is still running. All right? They hit take profit except one that is still running. And the London strategy achieved its target for, I think, almost all the pairs. All right? I've been warned that I'm having 10 minutes to end my training, my trading. If I end before I actually complete my training, I probably might ask you to jump back in. All right. All right. So, and then you plan your strategy to fit your schedule. Okay, whether you want to be a swing trader or a scalping trader. Okay, a scalper basically is somebody who is trading continuously on the screen, but as a swing trader, you can actually place trades once a week or twice a week, and that's it. And you make money just like any other person who is actually trading. On top of that, I have actually automated the London strategy, and now I have an EA, and in fact, I think some of you who managed to join me on Facebook Live today, you saw the London strategy that was done by an EA. The beauty about the EA is that you can fully control how it places trades. The moment it places the trades, you can still change the dynamics of those particular trades, because each one of those candles takes 1 hour to complete. So you have a complete 1 hour, 2 hours to be able to actually readjust your trades, not just that you will trade like a robot the way the robot does, but the robot will help you to place trades at exactly the right time, at exactly the right places, and it is able to monitor your trades, is able to trail stop your trades, and that's something that I'll be sharing on how probably I can share that particular EA with the rest of us. Okay, and probably you could also consider building teams. All right, IAM gives us an extra way of making income by building teams, okay, and helping other people, just like what I'm doing today. I'm actually sharing my ideas with you, and probably somebody will get help from this, and that is good. All right, that can also be monetized by IAM. Okay, so, and then the other thing is join and participate in the IAM community. This is a community of traders. When you trade alone, you probably will second guess yourself. But if we trade together as a team, I remember, I think the last 2 weeks or so, we were meeting with a number of us in town and trading together, and I think we actually achieved a lot together. So trading together, trading as a community is quite important, and that's why I am grateful that all of you joined me today, even for this particular training. So basically, that's what I needed to mention. Somebody also could like to know how to calculate take profit, TP. How to calculate TP? All right, TP is basically how many pips away from where you have entered, okay? So basically, maybe if I could see if I can share my screen here on a MetaTrader 4. Let me see whether that is possible to actually do that briefly. Okay, but basically, how to calculate your TP is calculating from your entry to the next level, how many pips there are. So if your TP is 30 pips away, you just place there, you just place your entry at 30 pips. So for example, in the London strategy that we use, we take 20 pips for the US dollar, 30 pips for the other pairs. All right. So probably before my 10 minutes, I think now I have only 5 minutes. So maybe in that 5 minutes, I can take you briefly through the London strategy. Let's see whether that I can do that briefly. Okay, all right, let me see. Okay, let's see whether I have this. Okay. If you are with me, if you are following what I'm saying, probably you can type on the question or whatever it is on the screen. Let me go here and new share. Okay, share. Okay, the London strategy. Okay, I think, yes. So if you are looking at the London strategy, basically the risk management is the same. I think we've talked about that. We've talked about how this one does. So basically the strategy is this. You observe the first hour in the London, the London time frame. Now, according to the original strategy, you are supposed to look at between 8 and 9, but I have amended that to be between 7 and 8. All right. So in our local time, it will be the hour between 10 and 11, not 11 and 12. I found that it works well for the first hour between 10 and 11. Okay. And we have said that for take profit for US dollar, sorry, pound against US dollar is 20 pips, not 30. No, all these others is 30 pips except for this one, which is 20 pips. All right. All right. And then you only observe these other these other issues that you need to check whether there are any high impact news that will be coming so that you watch your trades and so on. And basically that's how the London strategy is. And as I said, now I have an EA that can assist you to do these trades and we can have that. So I don't know if there is anybody else with any other question. I think basically I have finished that. What I'll be doing is that I'll be running simulations online. And the beauty about the simulations is that you can be able to see how to improve your trades. You can be able to see how to improve your trades. So basically, that's what I'll be doing from time to time, and I'll be announcing that in the group. All right. So anyone who has any question, you can type it, or if you want me to unmute you. And you can ask a question, I think that will be fine. So, anyone with any question? If you found value in what we have shared today, maybe put there 222, all right? Maybe put there 222. And remember, tonight we are going live with the. Thank you very much. Thank you very much. We are going live with the top trader in price trap, and price trap, which is actually basically what the London strategy is based upon, is can be applied on any currency or any particular instrument that is traded in the foreign exchange market. So that is also a powerful one. So make sure, thank you very much. Thank you very much, everyone. Thank you very much, everyone. I think I'll be doing more of this kind of training and be focusing on many aspects of the foreign exchange trading often. So thank you very much. And make sure that you plug into IAM. It is the best place to be as a foreign exchange trader. As I mentioned, this is a serious business. And if you take it seriously, it will give you the serious money that you deserve. But if you don't take it seriously, it can also harass you, okay? Now, the interesting thing about foreign exchange is that it can be addictive, meaning that if you are losing money, you will keep on losing money. So why don't you just put a break and a stop and say, I would like to learn how to trade so that you make money. All right. So I am encouraging each one of us, let's make 2020 our year of success in foreign exchange trading. Thank you very much. God bless and good night. Thank you for being here today. Thank you.